This is the Watchman giving a clarion call. And man, talk about an interesting week last week. From the Super Tuesday action on the political scene to the market action melt-ups in equities to the fascinating reactions in the gold and silver space, things are beginning to get very interesting, especially on the gold scene where it appears that after all this time, the gold market could be getting extremely tight. Now, why would I say that? Well, there was a fascinating tell this last week as one of the big ETCs, exchange traded commodities in the gold and silver world, has just announced that it was suspending issuance of new shares of its gold trust. That's very interesting, right? But wait, there's more. You see, if that wasn't enough, the reason for their decision is what's really turning heads. Let's take a moment to read a portion from BlackRock's own statement on the matter. Quote, suspension results from surging demand for gold, which requires registration of new shares. iShares Delaware Trust Sponsor LLC, in its capacity as the sponsor of iShares Gold Trust, has temporarily suspended the creation of new shares of IAU until additional shares are registered with the SEC. IAU holds gold as a physical asset, is an exchange-traded commodity, and has $8 billion in assets under management, and has expanded $1.4 billion year to date. February marked its largest creation activity in the last decade. This surge in demand has led to the temporary exhaustion of IAU shares currently registered under the 33 Act. We are registering new shares to accommodate future creations in the primary market by filing a Form 8K to announce the resumption of the offering of new shares. That's very interesting, end quote. That's so interesting here. Here we have BlackRock, who, by the way, is also the custodian of winning vehicles like the silver ETF SLV. That's simply stating, don't panic, don't worry, guys. This is simple, standard operating procedure. They're saying that since they're not an ETF but an ETC, they're structured differently and have to wait to issue new shares until the permission has been granted with the SEC. That's the story. Routine SEC hoop jumping. Now, fair enough on the surface, but I think there's much more behind their decision than just that. Now, brothers, let's remember here that what we know 100% is limited. Okay, I want to frame what I'm about to say by declaring that it is speculation. But in this grand space of precious metals fraud that we already know is fraud, we have to allow ourselves the room for speculation in order to reach true and proper conclusions. Now, just so long as the evidence and reason also accompanies that speculation, there is no problem. So here's a few points to consider on why there's likely much more behind this decision than simply them waiting to get their paperwork in line. So let's dig in. What should stick out to you is this phrase from them right here. Quote, IAU has $8 billion in assets under management and has expanded $1.4 billion year to date. February marked its largest creation activity in the last decade, end quote. Now, if this is simply a case of having exhausted the shares they can create, meaning the gold they can purchase due to price appreciation, then why was there never any similar share suspension in IAU during previous times of similar or even greater price appreciation? Now, I want to show you what I mean. Take a look here. I made this 10-year chart of IAU to show you what I'm talking about. First, look at this arrow with the number 1. Okay, right there. That gold spike occurred in the last quarter of 2008 when gold spiked from the bottom of $690 back to over $900. That's roughly a 40% surge of gold's price, much larger than the current one. And at that time, the share price of IAU went from $716 to roughly $916-ish, or what comes to nearly a 30% share price appreciation in just 3 months. Okay, that was a huge surge, much bigger on terms of percentage than what we have even now. And plenty of share issuance was given virtually overnight. Yet, strangely, there was no suspension of new shares created at that time. Now, why wasn't there a temporary suspension of new shares at that point? Now, secondly, I'll bring you to the second arrow that points to the apex move, the ultimate spike thus far in the gold bull market. That was back in June and July of 2011. In that price spike of gold, the IAU share price went from 1464 to 1782. That's a 2-month move of nearly 22%. Okay? That's equally comparable to the current move from roughly $10 in IAU at the beginning of 2016 to just over $12 now. Yet again, there was no share issuance suspension. No suspension. And thirdly, that third arrow also points to a roughly 15% move in less than 2 months, and there was no suspension enacted. BlackRock's reasoning for why they ceased share creation, which basically is just that it's never happened before, not like this on this price scale, but that's not true. Okay, it has happened before. It has precedent. Those are just 3 times. There were 2 or 3 other times I didn't even point out. So that just really doesn't fly. They never have suspended it before during other similar moves. So brothers, if that wasn't the real reason for suspending new shares, then what could be going on? Well, take a look at this chart from Steve St. Angelo. Here we see that in 2 months, they've increased their gold holdings by 1.2 million ounces since New Year's Eve. That's impressive. That's basically the same rate that the Russian central bank has been buying gold. They've averaged about 600,000 to 700,000 ounces of gold per month. Now, just imagine if you suddenly threw another Russian central bank into the mix, just straight onto the market. I mean, would it tighten the market enough to cause a squeeze? Well, theoretically, it could, especially when you consider over the same 2-month period that we're told that the GLD added hilarious 4.8 million ounces of gold to its vaults without any problem whatsoever. That becomes over 6 million ounces of gold sucked up by these 2 gold funds in just the last 60 days. Now, that's unreal. And in fact, that's nearly 50% of all gold mined during that same time frame. All right. Now, it's possible that IAU either added these shares so quickly that it outpaced the actual gold acquisition to back those shares, and that they just concluded that they'd add the gold to back the paper entries later on. It's possible. I mean, just look at the rate of ascent. I mean, it's also possible that they added the gold they needed to in a timely fashion, but then realized that continuing to do so could actually worsen an already very tight gold wholesale market. Now, if you look at the global gold supply figures, there was actually a huge gold deficit of 1.4 million ounces in the 4th quarter of 2015. Okay, that was before this huge surge of ETF and ETC gold buying. Now, what we're seeing here could be the straw that broke the camel's back in gold. Okay, all this new gold buying from the world's largest gold funds would absolutely put incredible strain on an already hamstrung gold supply chain. Now, between Russia, between China and India, the GLD, the IAU, just those parties alone, every ounce of gold is now spoken for before it's even mined. Now, this is serious stuff, people. The giant pool of gold for the London Gold Pool 2.0 has been like a reservoir for these crooks for many years. But the steady leaking of those reserves has now become a torrent. It is now flowing out at a rapid pace. And it's funny watching folks at GLD insist now that they're still trading normally and for investors not to panic, but to keep buying GLD in lieu of IAU. Now, it makes one wonder if GLD can continue to infinitely increase its gold holdings where IAU can't. Does it mean GLD's gold line items really aren't gold entries? but really just journal entries? I've wondered about that for a long time now, brothers. We don't know for sure, but what we do know in any case is that this sudden surge of gold demand has never been higher before when you add all the parties around the world that now want it. There are huge deficits in the gold market, and it is starting to show. And this act by IAU could very well mean that the gold pool, the reservoir available to these crooks, has now largely evaporated. If that is true, you will start to see something illuminating in the gold market in the weeks to come. We don't know yet for sure if that's true, but it could be. And if it is, watch out. This IAU story bears watching and closely going forward. This is the Watchman signing out. Stay vigilant and bring the fight to them.